Hi, I'm Angela Rose of AngelaRoseRealEstate.com. I'm here with 10 things you need to know about reverse mortgages. Now, a reverse mortgage is a special type of loan that allows you to borrow against the equity that you've built up in your home. Now, people can access the equity in their homes and receive regular monthly payments in either a line of credit or a lump sum payment. Proceeds of the loan must first be used to pay off any remaining mortgage a person has on their home, and borrowers are no longer required to make mortgage payments. So the top 10 things that you need to know. Number one is that you must be at least 62 to qualify. These loans are not for everyone. Number two, you can put the money towards anything you want, from paying medical bills to making home improvements on your property. Unlike a traditional home equity loan, a reverse mortgage doesn't need to be paid back immediately, perhaps not even in your lifetime. That means no monthly checks to write to your lender. Number three, the government insures nearly all reverse mortgages through its Home Equity Conversion Mortgage, and that's a program through the Federal Housing Administration, FHA. Number four, the program requires formal consumer counseling before borrowers can take out a reverse mortgage. Number five, once they've spent down the equity in their home, they're still entitled to live in it as long as they wish without making mortgage payments. When they eventually do leave the home, they or their heirs can either pay off the accumulated loan charges and keep the home, or walk away and let the lender have title to it. Number six, you also have to own your home outright or be able to pay off your home with the proceeds from the reverse mortgage. Number seven, you must live in your home, and your home must meet certain criteria according to HUD. Most single-family homes do qualify. Some condos, some manufactured homes, but multi-unit structures sometimes will meet FHA requirements. Number eight, the title remains with the borrower. When your home is sold, you or your estate will need to repay the lender any cash you received from the reverse mortgage plus interest and other fees, and any remaining equity in the home belongs to you or your heirs. You still need to pay any property taxes, that's number 9, and home insurance. For some reason, if your homeowner's insurance is lapsed, you're going to need to reinstate your policy. Now, you also need to make sure that you're current on any homeowners association fees. Now, number 10, when do you have to pay back a reverse mortgage? Well, when you die, sell your home, or if you permanently relocate. The loan also becomes due if you default on the loan by not paying your property taxes or your insurance, or if the property conditions deteriorate, and that's very important. So the question is, are reverse mortgages expensive? Yes, there are substantial upfront fees that you need to be aware of, loan origination fees, closing costs, some private mortgage insurance, and those are some things with interest and servicing fees you're going to incur during the course of the loan. So before you take out the loan, you're going to have to consider how much you're going to pay in fees so you have enough to cover all the expenses. So for example, the standard loan charge is typically around 2% upfront for a mortgage insurance premium that protects the lender. So there's always other options besides a reverse mortgage. You can downsize to something smaller, cheaper. You could rent. If you want to stay in your home and you need to make ends meet, you can think about getting a roommate, start with family members or friends. So there's always options, but those are the 10 things that you need to know about reverse mortgages. And I'm Angela Rose of AngelaRoseRealEstate.com.